Welcome back, guys, to another video. So this one I'm going to be doing a bit different, all right? So I'm still going to break down the two trades that I took. It was a bit while ago. I think it was on the Thursday. It was on the Thursday. So I'm going to break that down for you, but then I'm also going to go more into the liquidity side of things, because in my strategy, I like to take these liquidity sweeps. Okay, so I'm going to explain the dynamics behind why I take these liquidity sweeps. And look, if you don't understand it, that's all right, because I'm also going to make a whole video on how to master liquidity sweeps, how to spot them, and which ones to take. So make sure you guys are subscribed and you have your notifications turned on, because that video will be coming out soon. And I guarantee you guys will learn a lot from that video. All right, so let's jump into today's video. So now on the Thursday, we had some nice market movements, okay? I took one loss and one nice big win, and both were on liquidity sweeps. And if you've watched all my other videos, I always like to take liquidity. I like liquidity to be taken first, and then I enter my trade. So I'm going to break down both of them for you so you can get a better understanding. You might be looking at the charts and be like, what the is this, Ryan? But look, that's why I'm here. I'm going to break it down for you guys and make it easier to understand. And let's go from there. All right, so I've cleared it up, nice fresh charts. Let me put it back into replay mode as well. It gives you guys a better understanding of what to look for. All right, so now, like I always like to do, every time I take a video, I'm always saying this: higher time frame analysis, higher time frame analysis. All right, so we'll jump onto the weekly. Weekly just gives us a better perspective of the market, okay? So this time I took this trade on Ethereum, a bit different to Bitcoin. And the way I like to trade Bitcoin and Ethereum is all the altcoins follow Bitcoin, all right? Everything just follows Bitcoin. Whatever Bitcoin does, everything else is gonna follow it. So if I want to trade Ethereum, I also want to get a better understanding of what Bitcoin's going to do, right? Sometimes entering a trade on Bitcoin just doesn't work because of where price currently is. So Ethereum can give me a better entry, and I take Ethereum instead of Bitcoin, right? And vice versa, right? If Ethereum has a shit entry, then I go to Bitcoin, I take the entry on Bitcoin. Bitcoin I like to trade mainly because much cleaner price action. But sometimes the entry is kind of shit on Bitcoin, so like I said, I jump onto Ethereum. So if we start on Bitcoin, just gives us an overall understanding of where price is and what it's doing, right? So like I marked out last time, we are in this imbalance. We're sitting in this imbalance currently on the weekly time frame. We can jump down onto the 12-hour. We can see that price has come and swept this level, okay? So previously, on the lower time frames, we did have a nice short that I took. And the reason why I didn't expect price to come really low was two things. Number one, the amount of shorts that would have been stacked up, there's just more liquidity to the upside. All right, let me break down what liquidity is. Liquidity is resting orders in the market. This is what you see in your order book, okay? Your depth of market. People who take limit orders, they set specific price points of where they want to enter or where they want to exit the market. And even if you take a market order, you still have a order that goes into the limit book if you're using your stop loss and your take profit, okay? Because if you're selling somewhere, you're buying back at your stop. So that is still a buy order, okay? So for example here, if I want to, say we bought into the market around here, right? We bought into the market here and we're placing our stop loss up here, right? Don't worry about it getting hit, stop loss getting hit. We're just looking at the price movement here. So we entered the market at this candle here and we've placed our stop here. So essentially we're selling in the market here, but to get out of the market, you need to buy your order back, okay? Because for every seller, there needs to be a buyer. And currently we're selling, and to get out of the position, we need to buy it back, okay? So your buy order is back up here, above here. So there's resting liquidity there, right? You have your stop loss placed there. It's in the order book as a buy order because someone else is selling at that level and you're buying it back at that level, right? So that is liquidity. And there'll also be a lot of people who want to go long. A lot of traders, they do breakout trading, right? They wait for a price to break structure and then they're buying, and that's also more liquidity, okay? They have resting orders there. That is essentially what liquidity is. Resting orders, right? Liquidity doesn't essentially cause the long candles, right? The long candles are caused by market orders. Because essentially when liquidity is dry, the market orders that's what causes these pushes in price, okay? And like I said, I'm not gonna go too into depth because I am making a whole nother video on liquidity. So make sure you are subscribed for that. And that will go way more into depth. I will make sure you guys understand clearly what liquidity is and how you can use it in your trading. But I'm just giving a quick overview of essentially where the liquidity is lying. All right, so with price pushing up into this imbalance, and it wasn't pretty deep, it didn't come in pretty deep as you can see. I had a very strong feeling, and based on my experience as well as trading, price would continue to push high, would get a little retracement. And as you can see, it came into this imbalance. I unfortunately missed out on this long and couldn't get in, but we had a nice push up. We've taken out that liquidity at this level. So that was great to see. Price came out and took it out, okay? So now putting that all aside, explaining why that price I was expecting price to come higher. Now we're gonna be looking for our long entries, and I'm still planning to go long off how much momentum price has right now. It's very, very bullish. So I'm just looking for those opportunities to stay with the trend, continue with the trend. And yes, we are sitting in this imbalance zone, but with this imbalance zone, I use it more as a target for price to come into, right? It doesn't necessarily have to respect it all the time, but price likes to come back and fill these imbalances. Jumping back onto the 12 hour, okay? So we've seen, okay, price, yes, it's come back in, it's come into this imbalance. It's respecting the level. Yeah, we do have pockets of imbalance below as well, but that's something I'm not too worried about right now. I'm just looking for a potential long to go because we do have this little flip zone here as well that price could respect. Okay, if I mark it out for you guys, we've got this zone here, and that's a potential zone that price could respect. Yeah, we're very bullish with price. The momentum is there, so I want to try to stick with that momentum and not trying to go against it. Yes, I've taken counter trends, but this time I'm just trying to stick with the trend. Now coming on to Ethereum, let's just mark out Ethereum. Okay, so Ethereum is in. It doesn't look great on the weekly. It doesn't look great right now on the weekly, so all I can do is just drop onto the daily. Gives us a better understanding, right? We're in this cluster of price here, this supply zone. Price has come, it hasn't taken out this level, right? It's that, which is surprising. So we have that liquidity level there. So essentially, this is something that I'm also looking out for. If I wanted prices to come lower, I would essentially want liquidity to be taken, because there is a lot of orders resting there that would either push price up higher or push it lower. So I would first wait for that to be taken and then look for a short. So right now, what I can do is on the lower time frames, look for a buy into this level. So that's what exactly I would be waiting for, is price to come and take out that liquidity level. I'm having a look at the charts. I'm just getting an understanding of where price is on the higher time frames and possible entries on the lower time frames. So there's two things that I marked out, right? Because there was two trades. Number one, we are in this little cluster of price here. If you mark this out here, it's an internal little demand zone. And as you can see, we have some liquidity sitting here, right? Price made a higher low, broke up, made a higher low, and it didn't really break structure. But what essentially this is, we still do have a lot of liquidity sitting up here at this level. Right, so there's liquidity sitting there, and there's also liquidity sitting down here as well, right? So these are the two liquidity spots to look out for, right? And look, for us to go short, I want to tell you again, right? It is better if price takes out a little bit of this liquidity. What is stopping price from taking out this level of liquidity? There's so many orders there that could cause so much pain in the market that will allow price to move in a certain direction. So it would be smarter to wait for that to be taken and then look for a shorting opportunity, right? So right now, like I said, I'm still looking for a long into this level, right? So let's jump onto the 5 minutes. So we've marked out, okay, we've got this little demand pocket here. We also do have imbalance. Now, there's also liquidity sitting down here as well. Let's not forget this, right? Let me mark that out for you guys. So liquidity sitting at this level, right? Because what is liquidity again? Liquidity is resting orders, right? So say for example, someone is going to go buy at this level, their sell, right? Because they're buying here, and for them to get out, they need to sell it. Their sell orders are stacked here, and people looking to go short, right? Those people who are using breakouts for their trading strategy, their sell orders, sell limits are going to be placed there as well, right? And we do have this big pocket of imbalance sitting below, and as you can see, it's a little flip zone as well, right? Price respecting this level pretty strong. Okay, so what we're going to do, wait for price, patience, wait for price, let it play out, let it come into an area that we want, and then look for an entry if there is an entry. So let it play out. All right, let me get rid of this. So letting it play out, okay. So now we're coming close to this liquidity level, and this is the first level that I'm looking at, right? And if we go to Bitcoin, let's have a look at Bitcoin. So Bitcoin was also in this level. As you can see, this little pocket, was it this pocket? Let me go to 30 minutes. Yeah, so we did have a little imbalance here as well, right? So, and liquidity here. So like I said, I use Bitcoin as well to help give me more confluence of what price is, because whatever Bitcoin is going to do, the rest of the coins are going to do. All right, so we've had a sweep here on Bitcoin. So this is looking for a potential long for me. At the current state of how I was trading live back then, I am looking for a long now. So going back to Ethereum, I waited for a nice close of this 15-minute, and we closed pretty strong above, right? We came into price, and I'll mark this out for you guys as well. We had this little cluster of price here. It's on the lower time frame, right? We had this cluster price, tapped into it, respected it, and closed above this level. So this signaled to me that it was a great trading opportunity, right? Because number one, we're looking for long in a bullish trend. Number two, we've come into a internal demand zone that we've marked out where price could react off. We've had liquidity taken internally, and there's liquidity to target as well, right? So this is where exactly on this candle close, I entered my stops. I placed it right below this, right below that wick. Because if price is to come lower, my trade premise is wrong, because it's already taken out that liquidity at that level, and the next liquidity is over here. So there's no point in me placing my stop loss here, because two reasons. Number one, my risk reward is shit now. I'm only getting 2R. Here, it was like close to 6R, right? So that's the first reason. My risk reward is diminished. Number two, if I'm placing my stop loss here because I feel like this is a point of invalidation, if price breaks below this low, it is most likely going to target this low here. So I'm wrong on the trade anyways. So why wouldn't I rather be wrong on the trade here, where I'm getting a better risk to reward ratio, than being wrong on the trade here and having a lower risk to reward ratio? Because two reasons as well. This can allow me to look for a potential entry opportunity here, which I will get into later for you guys. That's a key takeaway, okay? Just because I got the trade wrong here doesn't mean it's gonna be wrong here. And I'll go more into depth of explaining that later at the end of the video after I show both trades. That's that liquidity level to be taken, right? And the next liquidity is probably somewhere down here. That is a lot of momentum for price, especially in this bullish trend that we're in. So let me play it out for you. So we have entered here and going long, stop place right under here. And I'm targeting obviously these highs here because that is where a lot of liquidity is, right? I could target here, but you got to be careful as well that this could just be a ranging market for a bit. And you do not want to be sitting in this trade where it's just doing, let me show you, right? And let's say, for example, you don't want to be sitting in this trade where it's doing something like this, comes down and boom. Like, I guarantee you'd be pissed off if that happened to you, okay? Because number one, it's going in your direction. It's just taking out that lower liquidity level. And you're getting annoyed that price isn't doing anything in this area. So it's going to affect your psychology as well. So in saying that, it is better to have the target here, because what it could also do is it could come here, sweep this, come lower, and then push up higher, right? So take liquidity at this level, then take liquidity at this level, and then that gives it the fuel and momentum to push up to this level, okay? So that's why I'm placing my take profit there, right? So let's play it out, and straight away, I'm out of the trade, all right? Let me go back a bit. So boom, I got absolutely destroyed on this trade. Like, there was no hope of me recovering this trade, right? Even before this, I thought, okay, maybe there is a potential for it to go with that candle there. I was like, okay, we're still in. There's a possibility, but out of nowhere, just got destroyed, right? That just obliterated my level. And yeah, so we've taken that loss, right? That was the first loss. And like I said, I'm also looking at another key level where I could potentially go long, all right? So that's the first trade loss, all right? Got obliterated at that level. Now we're looking at the other level where liquidity is. We have imbalance that can be filled as well, and price could strongly push up. Now let's go also to Bitcoin and have a look at that price action, all right? So we go to Bitcoin, we've seen it come down pretty strong, okay? Bitcoin did that sweep, it was chopping and then break down. And we do also have this zone that it could potentially come in. So let's play it out. And boom. All right, so that was my second sweep, okay? All right, boom. So that was the second sweep. Exactly as well what I was looking for. And we'll go to Bitcoin, get a better understanding of Bitcoin as well. So what I liked about this is that it respected this level here. All right, and it bounced off it pretty strong. And if we even take a fib out, take this fib out, nicely in that zone that it's reacting off. So I am looking to enter here, all right? Now, Ryan, you may ask me, why are you taking this trade? Bitcoin has not taken any liquidity, but it has, okay? No, it's pushed down and it's filled more limit orders, okay? Because not everyone necessarily who's buying and putting their stop losses right below that, right? Some people want it for like a bit of room to breathe, right? And look, if you're placing your stop loss in a demand zone or a supply zone in the middle of that, you got to think about where you're placing your stop loss, because that is still a zone where price can come into and target. So it's better to be wrong at a point of early invalidation than in a zone that's like a target for price, because your risk reward is going shit. Here, your risk area is bigger, less potential for a greater loss. And when I'm saying that is, okay, this whole area is 1K, you could close it out, right? But if this whole area is 1K, the whole 1K is gone, right? So it's a 500 to a 100. But look at the upside. You need to think about the upside, your risk reward, the longevity of your trading. You want to capitalize on wins and get those good risk reward ratio trades, right? In saying that, that is also a level that I looked on a Bitcoin. I'm like, this is a good trade to take. And that is exactly what I did. I entered at this level with this close and stops placed right below. Okay, and I targeted this little cluster of price, right? I went for a nice 6. Pretty sure I was targeting 360, yes, right? I think my stops are a bit more tighter than that. I think it was like placed right over there. It was something like this, right? So there, I was targeting, I remember I targeted 3360. I'm not too sure where my stop was, but I don't know, I think this was exactly the setup. But if you want, just go to the beginning of the video and then you can see the exact take profit and stop loss for the trade. All right, so boom, straight away, we are in this trade going long. And I'm also gonna walk you through my risk management for this trade. Now, this was a pretty pitch perfect trade, I'll be honest. And you're not always gonna get these trades that are pitch perfect, but this will help me break it down for you guys of how to manage the risk on this trade. So number one, let's get rid of this. Get rid of that bugger out of there. All right, so let's get rid of this, get rid of this. So the only reason why I am targeting this is because, like I said, we're ranging a lot right now. It looks like, from my experience, it looks like we're just going to create a ranging market, right? Price is just going to go up here, up, down, boom, boom, like this. So I just want to make sure I can capitalize on a trade and just get out early instead of like waiting for it to push up and then it just nukes back down near my like moved stop loss or my entry. Okay, let's walk through it. So trade's playing out and boom, straight away, we have this nice move. And I jumped onto the 5 minute just to give me a better understanding of price. So so we've had this nice sweep, price pushed up, and after this big candle move, I was like, okay, this looks really good. We are on. And I straight away moved my stop loss right under this guy right here. That's where my stop loss is. Okay, let me write that in. Stop loss. So my stop loss is right there. I did not have this move yet. So this was the move where I moved my stop loss. We had that great push up and I'm like, yep, moving my stop loss there because this looks good. There's a lot of momentum off this liquidity sweep and there's a potential for it to keep going higher, right? So there's two internal areas that I'm looking out for how price reacts. You've got this mini zone here, this and another one up here and this imbalance here. So this could actually act as a flip zone for price, right? Because you've got this wick here, imbalance, this zone here. I gotta be careful of these zones, right? So I'm just watching how price reacts to them and we just played out a bit more, right? So here, as soon as we had this push and a respect of this level here, straight away, I'm taking risk off this trade. My stop loss is straight away here, right? Break even. There is no point of me keeping my stop loss here and risking it when we've had this great push of price. This great push of price, I'm not risking my capital, okay? So now all we can do, stops at break even, we're just letting it play and there's a lot of momentum, right? Okay, so we've come here, we've had this little close above this level. Now you're probably thinking, why did I not get out of this trade? All right, we've had this sweep, price is pushing down very, very strong. And let me go into the sessions, all right? So we're in Tokyo session and it is coming to the open of London session. And look, from a bit of prior experience, Tokyo likes to do this little bit of dump or pump before the London session. And London literally can do anything. So I'm not letting it affect me psychologically. I'm just gonna let it play out for a bit. Look, we're already in pretty big profit, right? If I bring this down here, that's already like a 2.9, sorry. So there's nothing for me to have to worry about here. And at this point as well, I've moved my stop loss at this level here. So this is my new stop loss level. Let me mark that out for you. So stop loss over here. All right, securing profits and at this level, so 1.25. All right, so we're already back to break even for the day. We had that loss earlier on, we are back, right? So let's put it back to, what is it? 360. It's around here. And so like I said, I'm just gonna let price play out. It is the open of London and there, as you can see, London had a nice push up and we just kept going. And so right now, I'm not too worried about the trade. It's looking really good. I'm just keep adjusting my stop losses. So as soon as we had this break above at this level, my stop loss was moved straight away to here, right? Because price looks strong and then we had price kept pushing up, right? And look, you're gonna have pullbacks on price. You just need to be able to have the ability to hold it, right? And that comes with experience. Yes, when you start out, you're gonna be like, oh shit, it's moving away, I wanna take profit. No, there's gonna be pullback. Sometimes it may pull back all the way. Sometimes it's a little pullback and it keeps going in your direction, right? That's why you adjust your stop loss to risk how much downside you're losing on the trade. So playing it out, and there we had a strong push, which was amazing, straight to take profit. And look, this, like I said, this was a picture perfect trade. You're not always gonna get these trades, but this literally barely had any pullbacks, right? It just went straight. And if we had a look at Bitcoin as well, Bitcoin was a bit slow and there were key levels as well that while I was looking at Ethereum and moving my stop loss, I was looking at Bitcoin. And I'll explain it as well, right? So there were times where you had these big pull downs, but levels like this got respected and we had strong pushes off it. That also gave me more confidence that there's more upside on Ethereum, okay? And as you can see, it kept pushing, right? And I'm pretty sure that pullback was this one here, 5:30. Let me have a look. Yeah, so 5:30 p.m., that pullback, right? And Ethereum was holding it pretty well compared to Bitcoin. Bitcoin did have a bigger dump. And as you can see, it held this level, then pushed up, and it kept pushing up, right? We made the high and we've come back, so I pushed and it went strong. So that essentially is the second trade that I took. So for the day, we were up 5R, which is still pretty good. So these are the two trades that I did take on the Thursday. And now this is where I want to come to the point of emphasizing on the more of how to think when it comes to trading, right? Because that's the whole purpose of me making these videos. Is I also want to help you guys to understand how to think when it comes to trading. Just because you got a trade wrong doesn't necessarily mean your premise of the trade was wrong, right? We were targeting those highs. We were looking for a long, right? What could be wrong was your entry or your stop loss placement. Just because you got the trade wrong doesn't mean what the market essentially is going to do is wrong. You just need to look for sometimes a better entry or look for next time a better stop loss placement. And in this case, yes, we entered a bit early, right? There was more liquidity to the downside to be taken, which price did take, but it necessarily, I would have never have known until price played out. It could have reacted off this level and kept going higher. So in this case, just because I got the first trade wrong does not mean I should be sitting out of the market, because then I would have missed this opportunity. And this opportunity paid back for the loss and even more. So sometimes getting in lower is not a bad thing because you've got more upside for the trade. Okay, now that's the thing I want to emphasize. Just because you got the first trade wrong, do not be scared to get back into the market at another place that you've marked out that could play in your direction. That is very important to remember when it comes to trading. And even vice versa, when you're looking to go short, wait for price to come a bit higher. Wait for it to take out some liquidity and then look for a shorting opportunity. You've got more downside. You've got more potential reward. But yeah, so these were the two trades that I took, and I hope you understood a bit more about liquidity and at these two levels, which one had more stronger liquidity and why the second one pushed off even stronger, right? There were more resting orders there, which is liquidity. And like I said, make sure you guys stay tuned for the liquidity video that will go more into depth of everything, understanding liquidity of the market. It will be made for beginners, and you'll come to the point where you'll be able to understand and master liquidity, right? But that's all for this video, guys. I hope you enjoyed. If you did enjoy, make sure you guys do leave a like and comment, because this will help reach other people where they could also learn how to think when it comes to trading. I'll see you guys in the next video. Peace out.